Welcome to Remarkable Retail Podcast, Season 10, The Baker's Dozen episode. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our very special guest this week in the first of several interviews recorded live in person at Shop Talk in Las Vegas, this one in the Burns Communications Media Room, is Barrie Scardina, President of America's Retail Services, Cushman & Wakefield. Full-service global commercial real estate company. Can't imagine many people listening to this don't know them. 100 years of experience, 52,000 people, 400 offices worldwide. Steve, for me, it was an eye-opening look at a different perspective of retail and what comes next for retail space from someone who's not only at the apex of understanding retail, but also one of us. She's a veteran retailer.
Yeah, just a ton of really interesting perspectives and insight. And yeah, I think for me, there were a lot of takeaways as people will hear. I think they'll find it very, very interesting. Thinking about retail more broadly than the way I guess I tend to default to kind of traditional retail and what that really means for the real estate market, I think is pretty interesting. Of course, as we'll get to in a minute, the economic conditions are constantly shifting. So whether that will portend a little bit different outlook than we get into, I guess we will have to see. But yeah, great conversation. First time, I think you knew her a little bit, but it was the first time that I got to meet her. And of course, it's always fun to do these interviews in person.
So be sure to check out our newly refreshed YouTube site. You and I did a bunch of fun videos in Las Vegas. We've mentioned that before. We're having so much fun being together and doing those. We're going to do it all over again next time in the Big Apple, in your old stomping grounds, right?
But you'll have to stay tuned for more details on that, though.
Stay tuned. That's our version of a teaser, as good as we can get done, like today. All right. So it's a slow news week.
I thought the environment for a lot of teasing, right? I mean, the environment's a little tougher for too much teasing.
That's true. Well, listen, let's get to the news. It's a slow news week. I thought I'd start us off by looking at some of the spring season baseball scores. In the American League East, the Toronto Blue Jays are off to a strong start, 5-2 ahead of the Yankees at 4-2. Okay. Just trying to lighten the mood here. But as a comic in all seriousness,
I thought you were going to talk about the bat, the new bat.
Oh, the torpedo bat.
The torpedo bat. Yeah. Or not.
As a comic in all seriousness, how was your Liberation Day?
It was great. I've been looking to get rid of my Tesla for a while, so I was very happy to see that go off. And as it turns, you're talking about a different Liberation Day?
Oh, yeah, sorry, but that's a good one too. I mean, it was a tough week. It's a tough week to be a Penguin, as it turns out, right?
I'm so tired of those Penguins and ripping us off. We've
been subsidizing Penguins for a long time.
we have been, and it's about time. It's about time someone hit back at them. And as I said on LinkedIn, it's time we make flightless birds great again. So get out there.
All right. Where do we start? I mean, there's lots of commentary going on, and it's a fast-moving thing this morning. The retaliations have started. Actually, yesterday, Canada retaliated with 25% tariff on U.S.-made vehicles. China this morning, the stock market's rocking. Where do you want to start? Where do you make sense of all this, and what's your perspective? Of course, from our lens is both understanding the economy and how important it is to retailers, and then how the impact is going to be to the retail industry.
Well, perhaps start out with what I think is becoming our standard disclaimer the last few weeks, which is obviously there's so much conversation going on about this that it's really hard to add a ton of incremental perspective, though we'll try to do a little bit of that. And the other thing is, this isn't a live broadcast, right? So who knows what will transpire between the time we record this and the time people listen to this. So that's my standard disclaimer. I think the big takeaway, at least so far, is that these tariffs were much broader than just about anybody expected and more nonsensical, I guess you could say. I mean, I think most people, including most economists, and of course, this has been the commentary, believe, unless you're deep down the cult following of Trump, almost everybody thinks this is among the stupidest things that any politician has done in decades, right? So you have that as the backdrop. I was following the news on Liberation Day. I was following the take, and then the day after when the stock market really crashed, I was watching quite a lot of CNBC, probably too much. And one of the funniest things was just how they were like, maybe this guy Trump doesn't really know what he's doing. And I'm like, okay, well, It's like, yes, he's demonstrably a terrible business person. I don't know really why anybody is surprised by this, other than it's such an own goal, right? I mean, it doesn't make any sense. I mean, regardless of where you come out on protectionist trade policy, and I certainly think you can make an argument that more can be done to get the playing field more level. So I don't, people are all over the spectrum on that view. But even if you have the more aggressive view, this has been really, really poorly executed. So that's just, I guess, the big picture.
A question for you with your economics background. Does this put the Fed in a real box where they're going to have successive decreases in interest rate? And is that the objective of the Trump administration? He's often talked about interest rates being low, so investments would be higher and sparking the economy. Is there something to that argument?
I really have. It's very unclear what the goals are here. I mean, yes, that could be part of it, but it's a really weird way to get there. He's been all over the map in terms of saying this is about fairness, this is about fentanyl, this is about raising more money. They put out a prediction that these tariffs are going to raise $6 trillion over the next 10 years, which I think is, nonsense, clearly. But so it's really hard to understand what this is all about. The issue with the Fed, I think, is, on the one hand, if you believe this is pushing us closer to recession and we see unemployment tick up and growth really decelerate, that would tend to suggest interest rates cuts. In fact, I saw a few people talk about an emergency interest rate cut. On the other hand, tariffs are absolutely inflationary, all else being equal. I'm really talking like an economist today, both hands.
You are.
But
both.
So
I
think it's a very
one-armed economist.
Yeah, right. Like a one-armed economist. So I think it's very confusing right now because most people have taken their inflation outlooks up, most investment banks and economists, as well as taken their growth estimates down. And certainly if you look at what happened with the stock market, at least last week, this again, it's very hard to, I'm not going to try to predict what's going to happen with the stock market, but clearly Thursday and Friday was a bloodbath. And that is both a reflection of people thinking earnings are going to be compressed because of the hit to margin, as well as growth decelerating. Yeah. Who knows? I mean, at this point, I think more has to come. And I suspect this is going to take several months, really, if not longer, to sort itself out.
Figure out. We've only begun to see any of the kind of countervailing, like action reaction stuff. That's only begun. Every year I look forward to the NRF sales forecast for the year webinar. I find they do a great job, but the timing this year was, we were talking offline, just super weird, right? Like, why would you do it on the day before a big announcement's going to be made that would materially change any forecast? But
I don't know if they were, for whatever reason, so locked into that date. But yeah, it was the webinar was 3 or 4 hours, I forget exactly, before Trump's press conference. And in terms of what they released, they said they were projecting slower growth than last year, which is kind of the same place I was. The range they gave was 2 point. They usually do about a 100 basis point range, 2.7 to 3.7 sales boost. Jack Kleinens, who's the chief economist for the NRF, said consumer spending is not unraveling. Now, whether he will come to regret that statement in light of what we just talked about, I don't know. But given that everybody pretty much seemed to be surprised by the breadth and depth or height, I don't know what I'm saying, of these tariffs, I would assume that would tend for them to take that forecast down. But as far as I know, at least at the time of this recording, there has been no further commentary other than the head of the NRF, Matt Shea, has certainly been out there saying that tariffs are not good for retail. So it's not a very controversial position, I think, to take unless you happen to be in the Trump administration.
Talking about bad timing, let's talk about RH earnings report. Just a tsunami of bad timingness, really.
Yeah, well, I'm going to. Well, we've long-term listeners will know we often hold RH up as a quite remarkable company, but I think we may have to revisit that in terms of some of the things that have transpired in particular over the last 6 months. But the particular thing you're referring to is that RH's earnings report, and I don't know why they're so late in the cycle. Actually, they're about the latest retailer to report that has a January quarter ending. But in any event, they had their press conference basically right as Trump was announcing the tariffs. So not only was the tariff news very negative towards RH because they have about 2/3 of their products produced in Asia, I think there's also a view that because they're focused on the high-end consumer with the stock market and asset values coming down, that tends, I mean, I know from my Neiman Marcus experience, that tends to be correlate, the market value or the value of the stock market, I should say, going down tends to be negative for high-end products. So we had that, but they also announced that their forecast in general their outlook was poor. In one of the great moments of a conference call, he got a question about whether or not he had looked at the stock price, and apparently he decided to glance at his computer to see what the after-hours trading was, at which point I think the stock was down about 30%, and he very eloquently said, "Oh, shit." So that was a good moment. But the more disturbing things, which we started to see a little bit last quarter, but really played out in the quarter just reported, was that they have a huge buildup in inventory, like crazy buildup. Now, I'm assuming some of this is to get ahead of the tariffs, so that's not necessarily a bad move. But they also did a very big buyback of their stock, which really, really looks stupid. Kind of reminds me of what happened with Bed Bath & Beyond. So their balance sheet is really deteriorated. And obviously the outlook in general for the home market is not terrific. And now you put the tariffs on top of this and the potential for a recession. It's really bad news. So the stock, when I looked at it this morning, is down something like 42%. Obviously that could be different by the time people are listening to this, but down a lot. The stock actually is down close to 60% since the beginning of the year. So this is, I would say this situation is maybe not quite dire, but quite disturbing, I would say. And I don't think Gary Friedman has helped himself by people that know Gary know he's an interesting personality, big personality. And I think his ego might have gotten him into a little bit of trouble here. So we'll see if how that plays out, but not great timing.
You said something interesting around bringing in inventory, high inventories, bringing in inventories to get ahead of the tariffs. And you and I have talked about, and we know that a lot of retailers have been doing that for the last 6 months. Does it feel like a lot of the cost inflation may not happen until holiday or later? Like there's a lot of inventory sitting on the dock. Demand might go down a little bit. The pros and cons of having a lot of inventory. There may not be that much impact this year in some commodities, given all this stuff. What do you think?
Oh, I don't think that's true. It certainly depends. From an accounting standpoint, one way of looking at it as well, if you're in last in, first out accounting, I have this lower cost, so I don't need to raise my prices. Right. I don't think that's the way most retailers think about it. I think retailers are looking at what other competitors are doing. I think they're sensitive to the market. Now, you got a push and pull on this. You've got consumers' expectations very clearly believing that prices are going to go up quite a lot. But at the same time, you have a slowdown. But I think overall, we will see retailers taking price increases in the next week. Obviously, that's basically happening. I think Walmart or Kroger, one of the big grocers, said we will be raising prices this weekend because of a lot of the fresh products, right? So you don't have that inventory
fresh
buildup.
First.
For furniture, obviously, you may buy it and not sell it for 4, 5, 6 months. But I think that we may not see the full force of the tariffs reflected in pricing in the next month or two. But I think we'll see prices start to go up in the first half of the year for this first half for sure.
So let's talk about Target. Their store traffic numbers, 8th straight week down, and many are attributing this to their stance on DEI. Is it really sustaining those traffic decreases this long? Are people still thinking about that?
Well, I think the boycott, I believe we talked about that several weeks ago, is I think is still in effect. But even if it's not technically in effect, it seems to affect a lot of people. And it's, as we've talked about, Target's been struggling for a couple of years. So some of the decline is related to their relatively poor performance. But it does seem like there was a material change in traffic patterns. This is data we're getting from our friends at Placer.ai. So I think that's really the only explanation for the deceleration in traffic. It seems to be very highly correlated with the DEI pushback. Yeah. So anyway, well, whether it persists to this degree, I don't know, but it's not, again, it's not great timing to have another issue on top of just what's going on with Target's relative performance, particularly vis-a-vis Walmart, but also just what's going on with tariffs, because they certainly have a lot of exposure as well.
What a week we've all just had, and we'll continue to have. And talk about a segue. We were just talking about real estate, and our guest, Barrie, which we're going to hear from right now, is perfect for the time, talking about retail real estate and what happens to it. So let's get to that interview. Barrie, welcome to the Remarkable Retail Podcast. How are you doing this morning?
I'm great. I'm so happy to be here.
We are together here in the BCG Influencer Lounge at Shop Talk 2025, walking the endless halls. You've just rolled off the stage, and we're so thrilled to have you join us. Last time we saw you was in January, and thanks for making the trek up to find the podcast studio.
Yeah, I mean, I had no idea how large this conference was, so it's pretty impressive and really well run. Unfortunately, I did not roll off the stage. I was concerned about getting off the stage, but I made it without doing any damage.
No, it's still early. Things happen.
It's early. It's early days. Tell us about yourself. What do you do? Who are you? You got a great background in retail before you went into real estate, and tell us about how you got to be you and what you do for a living.
Sure. So I lead our retail practice at Cushman & Wakefield for the Americas. And I've been with Cushman & Wakefield for 5 years, and it's been such an incredible journey. I started right before the pandemic with really not much real estate experience, but obviously a lot of retail experience. I have 30 years in the retail space. And I really was able to form sort of a voice that was a little bit unique about the importance of physical retail to retailers and brands, to developers, and to communities. And, really have sort of championed, my point of view for quite some time now. We look at physical space, and we've had a lot of conversations coming out of the pandemic that the world was over. Nobody was ever going to go into a mall again. Yep. And then we saw this huge resurgence, and now there's conversation about, what's going on from an e-commerce perspective. But as I look at retail today and I think about the joy of being together as a community, the impact that physical retail is having on communities and bringing people together, we really see a huge growth in retail, in physical retail in the next few years. And we're really excited about the different types of physical retail that are entering the market.
And we're excited to get into that because it's such a dynamic industry. I guess you brought a different perspective on the other side of the table, so to speak, as a retailer, but you arrive with no, as opposed to somebody who's been doing it for 30 years, no preconceived notions. You kind
I
of
had
fresh,
no notions.
Right?
Literally.
Ignorance is bliss.
Yeah.
Right?
But what was interesting for me was after I started to work with our advisory teams and understand their depth of knowledge, I kind of felt like, wow, all those years when I was working on opening stores with our in-house team, I didn't really know how incredible these brokers were and how much they understood the marketplace and the neighborhood. And, our directors of real estate worked with them.
Sure.
But as a brand leader, I didn't. And I always say to brand leaders now, it's so important for you to get involved in what's going on in terms of the real estate strategy, because it's your vision of your business and it's what the consumer is going to witness. And so if you're not really personally engaged in that, then you're really not driving that intimacy with your consumer.
It's such a great point. Now, name some of the brands you were with before you got into real estate, because it's a pretty impressive roster, just so the listeners kind of understand what you brought to the table.
Sure. So I started out my career, I started working in retail when I was like 16 years old, and I've worked for the Limited organization, and I worked at Macy's, because everybody in the 80s worked at Macy's. And actually, I've told this story, but it's a funny story. I got my first job in retail in Macy's in the gift wrapping department.
Right.
And the gift wrap rolls, they don't have gift wrapping departments anymore. The gift wrap rolls were very high in the air, and I am just under 5 feet tall, and I couldn't rip the paper. And like after 2 hours, they were like, "We're going to move her to contemporary sportswear. Like, just like get her out of here.
Awesome.
She's wasting all that time." So I've worked, I kind of grew up in that space, and I was working at Express in management, and I answered an ad in a newspaper that said, "If you
a
are
newspaper,
in a newspaper,
right?
What is this newspaper you
I
speak
know
of?
everyone's going to be like, she must be 100. So it was like, if you have strong math skills, and I had gone to school for accounting and finance, and if you love retail, you should come and be this thing called an allocator. And so I just, like, my love of the business was really born. I worked for Gucci when Tom Ford was there, which is obviously like one of my proudest moments. I was at Ralph Lauren when Roger Farah joined and got to work under him for quite a few years. I was with Ralph for about 10 years, and just that was an incredible experience. I worked for The Children's Place, which is a really interesting brand, huge volume of business at a very low AUR, so massive unit throughput, really a very strong distribution industrial story there. And then I worked for Tory for a little while, and then I joined Calvin Klein first as the EVP of all of inventory planning, merchandise financial planning, et cetera, and then as the president, which was really one of my favorite jobs.
What a background.
Yeah, but I have to say, I love what I'm doing today because I get to work with tons of retailers. I get to hear their stories, talk about their strategies, and then think about, from a physical perspective, how do I help them achieve their goals?
Fantastic.
How do I help them drive their plans?
Let me pick up on something you said about, I think the three of us weren't surprised that things like the retail apocalypse was just a narrative. It wasn't really happening and that stores were going to go away. But your organization put out a report mid-last year that talked about an epic, if I can put it that way, number that said there's not a lot of space available. Was it 5.4% occupancy?
Vacancy,
5
5.4% vacancy.
it would be very apocalyptic at 5.4% occupancy.
See, that's why we can edit podcasts there. We wouldn't be talking here today. So 5.4% vacancy, which is to some startling. But it's pretty. What's going on? Like, what is accounting for that kind of growth? Are people repurposing properties, or is it really this? Could we call it a renaissance? Talk about your perspective.
Yeah. So it's a very confusing time because on the one hand, we're saying there is no retail space, and if you are in some of the top markets, in New York and Austin and Miami and LA. In some of those markets, there's literally almost no space available. And then you read in the newspaper that there's stores closing. And you're like, I don't understand how to kind of, figure that out. Like, what do those two stories mean? But essentially what is happening is on the vacancy side, you're really not seeing any new construction come to market. It's very, very, very small compared to where we were in the last 30 years. And you're also seeing a lot of different types of business take retail space. So you've got, first we saw what I call medtail, the urgent cares and veterinary and dental, urgent cares taking space. Now we're seeing tons of things in the wellness space. And, we talked a little bit about wellness today in my session. But, we're seeing spas and obviously injectables, and we're seeing IV drips and all kinds and boutique fitness, cold plunge, all these things that are really designed to relieve stress and ensure that you're living a healthy life. Stretch Lab is a great one.
Right. So it's really more services than what some people might think of as kind of traditional retail.
Right. It's not just access. When we have to open our mind to think about retail differently, sometimes when we're talking about it, I think about it as much more about the experience than actually accessories, apparel, and footwear, which is what we thought of for so many years. But you've got like the growth of F&B. There's, growth going on in grocery. Like look at Aldi and Lidl. Like they weren't around years ago. And then you have all these experiences. So you've got swingers and you've got Sweat House and Dogtopia, and you see the Pickle and Chicken, and all these experiential opportunities, the Friends experience, the Office experience, Harry Potter, Nintendo is opening stores, Netflix is opening stores, which I'm so excited about because I'm a television junkie. So, all these things that didn't exist are taking space now, and it's really creating friction. Now, it's not everywhere, but, in the important markets, we're really starting to see that, it's difficult, which is making it difficult for people to open stores.
Sure.
It's also making it expensive for people to open stores because when you have less space, you have higher rents because you're having fighting over that space.
So it sounds like to a certain degree there's maybe a definitional issue, right? When people talk about what's going on in retail, I think a lot of times in my mind, frankly, goes to kind of core retail, whatever definition we want to use. But if we were to just get a little bit more specific, thinking about kind of traditional retail space where people are having success, I mean, one of the things that I look at, which is kind of hard to compute, and by the way, you're in a safe space here. Like literally the first line of my first book is Physical Retail Isn't Dead, Boring Retail Is. So we've been pushing back against the retail apocalypse narrative. But, CoreSite predicts that store closings are going to more than triple this year. Last year was a record year. When you look at the growth in core retail, almost all of it is concentrated among, 3 or 4 big retailers, and then, the VREs and a few other companies that are in dollar stores that have been opening a lot of stores. Digital is growing much faster than physical retail. So if you get to kind of zoom in on the core retail, how would you characterize the state of that part of the business? And then what kind of strategies are really working there?
I hate to kind of peanut butter spread, answers because there's so much going on in the space. For example, in apparel, we're seeing international brands opening up stores. Yeah. And and they're opening up stores. They're really focused on growth in the United States because it is the largest retail market.
Primark, Uniqlo,
sure,
Zara, H&M.
Exactly. And so you're seeing that happen. And even brands that you haven't heard of, like Khadi is a brand from Pakistan that we are in the market with that is opening up stores to incredible success. So, there's always going to be the need for us to edit the endless aisle. Or edit our assortment. So as I think about it, when you look at, Joann's and some of the other businesses that are going out, there's a reason. There's a time when they've kind of gone past their purpose, or they haven't really continued to reinvent themselves. I mean, you can't do the same thing forever. I think stores like Forever 21, there's so much competition in that fast fashion space, and that customer is shopping in marketplaces and they're buying secondhand product. There's just a lot of competition, and that customer is really discerning. And so if you're not thinking about how you're moving your brand forward and you're continuing to try to just work really hard up that hill, sometimes you just can't make it. And so I think we're going to continue to see the evolution of retail as we always have. As I say, very often we're not, shopping in Tom McCann or in Pants Place. Now everyone knows Chess King is a favorite of mine too. Now everyone knows how old I am. Yeah. But, we're continuing to see the evolution, and we'll continue to see that. And the Vioris and,
Aritzia,
one of my favorite brands, Hoka, which is opening stores. There's a lot of great brands coming to market. And I think we're going to continue to see them find their way add different categories, take different size spaces, and, you know, that's going to be kind of the next evolution.
I wanted to get your take on scenarios around three kind of tranches of things that are happening right now in the real estate game. You cover the Americas, so you cover Canada. So you've got Hudson's Bay releasing 80-plus stores. You've got, of course, Macy's cutting down. You've got JCPenney. Then you've got in America, you've got this big culling of the pharmacy-type businesses, you know, your Walgreens. And so if you think about those kind of different scenarios where you've got the mass merchants, the department stores, like even thinking about who's going to take up those 80 stores in Canada that are suddenly going to be available after 300 and some years. So how do you think about those three scenarios, and what do you think the outcomes are going to be?
Sure. I think what's happening in the pharmacy space is really difficult. You know, in some cases, they're not closing stores because that market is bad. In some cases, they're closing stores because it is literally almost impossible to run a profitable business with all of the challenges in insurance. And so
LP, loss prevention, and risk and theft.
Well,
and
there's that, but there's reimbursement is really the challenge. And there's a lot of challenges going on in the insurance and pharmacy space that are putting companies, you know, like Walgreens and CVS under tremendous pressure. And it's going to leave people with no pharmacy. And that, you know, in some communities, people count on their pharmacists like they count on their urgent care. You know, they rely on that pharmacist to give them, you know, direction and insight and feedback on how they're mixing prescription drugs or side effects or et cetera. So I think that's, you know, a real problem. And that space is struggling for a couple of reasons. So one, you've got the reimbursement challenge. Two, I think there's been an overextension of space. So I'm sure everybody lives in a place where on four corners there's a CVS, a Walgreens, a Rite Aid, you know, and that's an overextension of a sector. And so there's a right sizing that does need to happen, and that is just the way it is in our industry. But it's also, I think there are a lot of outside factors, and the theft in some locations has really been a burden also. You know?
It's hard to hire pharmacists. I mean,
it's really hard to hire pharmacists. And also, it's not great to go in and have everything locked up. Like if you need to buy, you know, razor blades to shave, to have somebody go and unlock that. And like, where are you finding that person? Like if you're in a store that's not performing, we all know the first thing to go is the staff, right? You lighten your labor. And so it's just been challenging. The department store story, which is unfolding in front of us.
Ripped from the headlines, so to speak, right? Unfolding as we speak.
You know,
it's been unfolding for 20 years.
Yeah,
it's true.
It continues to unfold. You know, I love a good department store. I'm not going to lie. And, you know, there's the Saks Neiman stuff that has to be sorted out. There's the closing of Hudson's Bay
and the 5 Saks
and the Saks.
But there has to be some mix of excitement around your shop, because it's like, you know, they weren't the highest performing locations.
They weren't. And there are, you know, experiential brands that are looking for large, big box, and, you know, we'll definitely see. I think Kazuko Morgan, who is our broker in San Francisco, said, you know, when she sees a department store go out in San Francisco, it wasn't really as productive, and she's excited to see, you know, how can they divide up that space and what can they use it for. And, you know, there are a lot of areas in retail that you can divide that space up and say, you know, we're going to use it for education learning. We're going to use it for seniors. We're going to create something on the first floor in terms of a gym, or, you know, we're going to put retail on the first floor and something different, you know, experiential on the second and education on the third. So there's a lot that can be done there.
It's helpful to have the outside entrance to the parking lots, I think.
It absolutely is. It absolutely is. But it's not an inexpensive thing to do. Yeah. And so, you know, we're going to have to do our due diligence and really be creative as we work with brands. Because we know, as sad as it say, there's still empty Sears boxes out there, and that brand has been gone for a while. But, you know, we always look at these opportunities as a way to bring more productive retail to a community. And that drives great revenue for the community, which drives tax dollars, which helps the community with their schools and their police and their fire and all those things. So, I like to think of what we do as like a high calling to it, not just the transactional focus. And so I think as we continue to, engage with communities and talk to developers, we're going to have to find our way. Mm-hmm. It's interesting. We talked about the lack of new construction, but what also has been interesting, a trend that I've been watching is like all this mixed-use development that's coming to market. And so, those are opportunities. We've seen, redevelopment in some of the older shopping centers. We've seen people take a place where they've had like a campus that's been anchored by office and start to add, residential buildings and retail. And that's all going to bring excitement for the community. And it's going to bring, new opportunities to bring people back to work by amenitizing their space. And that's been an exciting trend,
like a Hudson Yards in New York or the Well in Toronto, those kind of things.
Yeah, or even at smaller scale. Like
suburban.
We're working on projects, right, in the suburbs where we're seeing, like, you've got a couple of great office buildings. You've got people, we've got multifamily, and then we're bringing in like great entertainment, like a cool grocer and retail. And if you have an opportunity, for example, where DePiro's farm was, where I grew up in Bergen County, DePiro's was a farm that used to go pumpkin picking. And now it's a mixed-use development anchored by Wegmans. It has an Ulta. It has restaurants. It's got boutique fitness. It has a Warby, a Lulu. Across the street, across the road, it has a Pottery Barn, a Williams-Sonoma, and they just opened a Fleming's. So it's set in a very affluent community. Mm-hmm. And it obviously, because it's mixed its business the way it has, it's going to get a draw far beyond its trade area. I may drive 20 minutes. If the Wegmans people are listening, I'm driving 20 minutes to go to Wegmans. If you could just come to the other side of Bergen County, I would appreciate it. But
you have the power.
This is a personal plea.
This is a personal
public forum.
Yeah, it's a personal plea. But when we see that, that's such a dynamic way to reinvigorate a community.
So sticking on this, one of the things that's kind of perplexed me for years, first of all, I started my retail career at Sears and fortunately got out of there about 20 years ago. But both of us have worked in department stores and mall retail. And what's been surprising to me, because we've had so many department stores close, and as you mentioned, there's still many, many malls that have one or two anchor positions. In many cases, they have an anchor that's still operating but has less than $100 per square foot. Why hasn't, and mixed use, these lifestyle centers are not really new ideas. I'm curious, I have some theories, but since you're the expert, why aren't more of these happening? Is it zoning? Is it operating covenants? I don't want to get too into the weeds of how malls work, but it does strike me that more should happen. And it also sounds, I saw an article today that apparently some landlords saying that they were so thankful Forever 21 is going out because they want to, release that space to somebody who's going to bring more traffic and bring more productivity.
When we think about a mall that's on the downside, so let's talk about like an enclosed mall that's on the downside that has anchors that might be empty, or maybe one anchor is really poorly performing. And we're starting to see tenants leave, right? Maybe there's been another center that's open nearby. Mm-hmm. We're seeing maybe changes in who lives in the area. The redevelopment of that is really complicated. And I think post-COVID, when we started to really look at the number of C and D centers and even B centers that really needed facelifts and redevelopment, it was hard to figure out whether the investment was going to be worth it, right? So we come out of COVID, everyone's like, we're going to go back to stores, or maybe I was like, we're going to go back and shop in physical stores. But there were a lot of, malls that needed a lot of redevelopment, and it was slow just to get people to invest. We're definitely seeing now more and more investment, as I think people feel that retail is sort of becoming a much stronger investment. Just has been, I think, a little bit more stable in terms of, forecasting. And I think, as office has kind of, is still seeking that level, retail has kind of found a level, and it's been strong over the last few years, and it continues to be strong. Things like zoning, who owns the land. Sometimes in a mall, the department store owns that store and the land around it, but they don't own the mall. And they, for whatever reason, they don't want to negotiate to give that back or to sell it.
Well, when you pay little or no rent, it's not that hard to be cash positive.
Right.
Even though,
so there's like all these things. And then, there's sort of like the time it takes to sort of figure out like, what are we going to do in the space? But we are seeing that. We just saw like Walmart, right? Bought that mall, which I was like, genius.
Zombie mall, right? It was the mall used in a zombie movie.
Yeah, I know. But it was genius. I was like, great. They'll go in. They'll be an anchor. They're not paying themselves rent, right? They're going to be an anchor. They can assort the store. They can create experiences that align with what their consumer is looking for. I thought that was amazing. We saw Simon come out recently and publicly say we're going to reinvest in B malls. You kind of have to break it apart. In the B space, we have to reinvest. The property has value to it. Right. As you start to decline to the C and D space, I think there are going to be some things that need to be a tear down and something else goes there, right? And I know, multifamily has been a big conversation about, building because of housing shortage.
Affordable housing, yeah.
Yeah, so I think that there's going to be different levels of that, and that's really exciting. But I do think that we're going to continue to see investment over time. It's just taken some time to ramp up.
Yeah. This has been really, really interesting. I'm wondering, and a lot more we could definitely talk about. But before we let you go, is there any trend that perhaps we didn't get to that you think people should pay attention to, or any other insight that we didn't get a chance to ask you about?
Yeah, I think we're going to continue to see F&B and things that drive experience grow. And that experience can be anything from, like, we got to see the Gentle Monster store in the Forum Shops, and, every store looks different. I mean, that is anything that really drives an experience where the consumer can engage with a brand and really get to understand the brand ethos and have some fun. And so I think we're going to continue to see brands drive experience, the actual play part of retail be very, very strong, and F&B be strong. And I do think we're going to continue to see cities leverage retail to bring back tourism, to drive revenue, to create tax dollars so they can continue to, recover from what's left of COVID. And I think as we look at the suburbs where we've seen migration out to the suburbs, we're going to see a sophistication or an urbanization continue where we're seeing like celebrity chefs open restaurants,
It's the hope for the B and C's, right?
Absolutely. Well, yeah. And just, and for those outdoor mixed use developments, I think we're going to continue to see better coffee and better restaurants and exciting brands. I mean, for Lulu and Warby to be in a grocery anchored shopping center, it really tells me that retailers are using data and analytics to understand where their consumer is, and they're making great decisions about where they place brands. And I think that's going to create exciting stories in the future.
Well, that's a great place to leave it. Thanks so much for joining us. It was really wonderful to meet you and get all your perspectives. And we wish you a good other couple of days at Shop Talk, and we'll see you out in the world, I hope.
Yes, thank you so much.
Maybe when you come down to Dallas to see the Netflix store at the Galleria.
Yes, absolutely. Take care.
Thanks.
Thanks for tuning in. New episodes of Season 10 are available each and every Tuesday, so be sure and tell all your friends in the retail industry all about us. And make sure and visit our newly refreshed YouTube channel for exclusive video and our new virtual store tours. If you liked our episode, please take a moment to give us a 5-star rating on Apple Podcasts.
And I'm Steve Dennis, strategic advisor, keynote speaker, and best-selling author of 2 books, Leaders Leap, Transforming Your Company at the Speed of Disruption, and Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant and advisor, keynote speaker, and media entrepreneur. You can learn more about me on LinkedIn. Safe travels, everyone.